Do you feel like interest rates are too high to purchase a home? What if I told you about a legal loophole to drop your interest rate by 2% right off the bat? Let's talk the 2-1 buydown. The 2-1 buydown is one of several temporary interest rate reduction programs. So there's the 1-1, the 1-0, the 2-1, of course, and there's even a 3-2-1. And what these programs do is aggressively lower your interest rate for the first 1, 2, or 3 years of your loan term. Now, these programs are very popular right now, and the reason is that a lot of borrowers feel that in the next 12 to 24 months, they're going to have the opportunity to organically refinance into a lower rate anyway. So they'll never get back to that 6% interest rate that they would have had. Also, the fee for these programs must be paid by the seller. And right now, buyers have the leverage to ask the sellers for that type of assistance as part of their real estate transaction. So how does it work? Let's talk it through. For this example, we're going to have a loan amount of $350,000 and a starting note rate of 6%. Now, by starting note rate, I mean this is the actual interest rate that is attached to the loan product. So when you look at your loan estimate and your closing disclosures, that is what you're going to see. The temporary interest rate buydown, in this case, the 2-1, is going to be reflected on other documents. So now we institute the 2-1. So in the first year of that loan term, the interest rate will drop by 2%. So in this case, from 6% to 4%. What does this do to the monthly payment? Well, the improvement is quite drastic. Your monthly payment will drop by $427 per month. Pretty impressive, right? So in the second year, your interest rate will be 1% lower. So it'll go from 6% down to 5%. And your monthly savings will be $217 per month. Now in the third year, or the 25th month of your loan term, that is where the interest rate will return to the note rate, which is 6%. Now the hope is at some point in that 24 months, you will have had an opportunity to refinance into a lower rate anyways, or perhaps there is a significant change in your financial situation. Whatever the case, that full 6% rate is not quite as spicy as it was when you started out. Now, exactly how much does this cost? So again, the fee for this must be paid by the seller. And in this scenario, $350K at 6%, the fee is $7,764, which again, must be paid by the seller. But how do we get to that odd number? Well, the $7,764 is the exact amount of money that you would save over the first 2 years of that loan term. Essentially, the seller is just paying it for you in the term of a monthly subsidy. But I've got even better news for you. Let's just say you're 11 months into your 2-1 buydown, rates fall off a cliff, and you have an opportunity to refinance to, let's just say, 5% flat. If you do that, you don't lose that subsidy from the seller. In fact, that money comes back to you and is applied towards the loan balance as a down payment during the refinance. We are doing so many of these nationwide right now. The 1-0, the 1-1, the 2-1, the 3-2-1, and buyers are really, really happy with it. If you would like to see a full breakdown on what it could look like on a home that you're interested in, talk about buying down the interest rate up front, the particulars of each individual program, please reach out to me and we can talk every scenario through. If you like my content, please subscribe to this channel and check out my other videos.